Name is Tom Summers with Coldwell Banker Burnett. Well, actually, now it's just Coldwell Banker Realty. For those of you that don't know who I am a licensed real estate agent in the Minneapolis-St. Paul metro area. I work the entire area of Minneapolis-St. Paul, all the suburbs. I like to do these videos when I get an opportunity to, and I have to go back to interest rates again. There's a lot of confusion going on, so I just want to give you a couple of things to think about so you're aware of exactly what's going on in the market right now, because it really will have a lot to do with how you pursue purchasing a home as well as how you pursue selling a home. I will do some other videos this next week about the current market for sales, as far as how much is out there and what to expect. Same with the amount of inventory for buyers. But today I want to stick specifically just to these interest rates. I've had several conversations with friends and family over Thanksgiving, and a lot of people still believe that the interest rates are outrageously high and don't know the difference between mortgage rates and the Fed raising the prime rate, which is totally understandable because it took me a long time to understand this. So I want to break it down and make it as simple as I possibly can for everybody, so you have a talking point for your friends and family if you guys get in a discussion. So when inflation is raging and it's rising up, mortgage rates go up with the inflation because they're not tied to the prime. When the Fed comes out and they raise the prime rate 3/4 of a point, which is what they've been doing here most of the year, almost every single month, what that does is it's trying to slow the inflation. As soon as inflation slows, down come mortgage rates. So when you see the Fed adjusting that prime rate, it's going to be good for mortgage rates. I'm not saying that they're not still too high, but they've improved quite a bit in the last month. In fact, 2 or so weeks ago when we had that huge rally on that Thursday, and I don't remember how much I think the Dow gained 14%. It was a huge rally. Interest rates dropped almost a full point. So at one point, interest rates were about 7.25. Now, this is just hypothetical. You have to talk to your mortgage or your loan officer to get accurate rates. So this is just some stuff I'm getting from different mortgage people that I've spoken to, things I've read online. So let's break this down. At 7.25%, let's say you were going to buy a $400,000 home and you're moving up and you're putting 20% down. So your interest and principal payment, this is not going to be taxes and insurance, but just principal and interest. It's been a long day already. You're going to pay about $2,183 plus your insurance and your property taxes. I just saw online an FHA 30-year for 6.125%. But again, talk to your mortgage broker. But if it's at 6.25, which it's close to right now, your payment drops from the $2,183 down to $1,970, which is going to save you about $213 a month. Again, before your taxes and insurance. And if it drops to 5.5, which is what they're kind of saying they think is going to happen after the first year, then your payment drops down to $1,817 a month before taxes and insurance. But you're saving $366 a month over that 7.25. So as these rates start to drop, it gives you lots of opportunity. We're still in a housing shortage, but there's less buyers looking right now. So you have a better chance to jump in and get something that would work for you as these rates improve. You may not have to go, okay, I'm just going to buy this house and worry about refinancing because the rates have started to shift. But rather than believe what you're hearing all the time, I am challenging you to be a critical thinker and check for yourself. Call your bank, call a loan officer, call a real estate agent, somebody that's in the know that can answer the question for you so you know exactly where you're at right now on rates. So here's the thing. Everyone wants to bottom out. They want to time it out and be perfect, but I'm going to throw this at you. So let's say you wait for it to drop another half a point or 3/4 of a point, whatever it is, to save another couple $100 a month. But then all of a sudden a bunch of buyers start to jump back in, then are you going to put yourself in a situation where you are now back in multiple offers. We're still seeing some, but not a ton, a few. I'm not using that as a scare tactic, but there's a good and a bad side to everything. So what I would say is be diligent, look for the right house for you. And when you find it, move forward as these rates improve. And then if they do ever get back down to 4.5 or 4%, or even in the threes again, which is totally plausible, then you can refinance at that point. So just so you know, the sky is not falling. There are so many people right now that think that everything is complete and total chaos. Does the you know, current situation for all of us, it's kind of a bummer. Yeah, absolutely. It sucks. I don't like paying more for gas or groceries any more than any of you do as well. But I do believe that things are starting to improve. So whatever the Fed does in December, and if they only raise it, say, like a quarter point, that's even more good news, because that means they're getting all of this inflation under control, which is going to push back to the housing market. So get out there and start looking. Sometimes there are great deals to be had over the holiday season or right after the first of the year. As always, if you have any questions about buying or selling, give me a call. I'm more than happy to answer any questions for you. And I always appreciate a referral. I hope all of you had a wonderful holiday. And right now it's snowing in the Minneapolis, St. Paul area. So I was really hoping most of you would be at home and I would catch your attention, because you have nothing better to do than to watch this. Have a great day. I'll see you again soon. Thanks.